Hi, I'm Mike Guarino. I've been an insurance broker in California for 34 years. I'm putting together a series of insurance videos to help make insurance easier to understand. Your home is often your largest investment, and you want to protect that investment with the right insurance. I'm going to review the first coverage that appears on a homeowner's insurance policy called Coverage A. After coverage A comes coverage B through F. We'll get to those later, but right now, let's start with coverage A. Coverage A is the amount of insurance needed to rebuild your house, not your neighbor's house, not your friend's house, your house. Your agent should discuss the attributes of your home, including the year built, type of construction, quality of materials, square footage, and much more. All of this information is input into replacement cost estimator software to calculate an insurance limit. If calculated correctly, this coverage limit should be enough to rebuild your home if it were to burn down. Of course, building materials and labor costs can change over time. Also, because it is hard to predict exactly how much it will cost to rebuild your house, we recommend that you add additional coverage that can be accessed if needed. This extra coverage is often listed as a percentage of the coverage A limit. Some insurers call this extra coverage extended replacement cost. Others call it additional amounts of coverage A. Some companies won't offer this additional coverage, and others will, and they'll go up to 200% of your coverage A limit. If, for example, your coverage A limit is $300,000, a policy with 200% extended replacement cost coverage would pay out up to $600,000 to rebuild your house. To be eligible to purchase this extra coverage, you must insure the house to 100% of the estimated replacement value. Having this additional coverage does not mean you can underinsure your home initially to save money and then count on the additional coverage to make up the difference. This additional coverage is generally not expensive and should always be considered. Okay, now let's move on to coverage B, referred to as separate structures or other structures. What's considered a separate structure? Well, a fence, a tool shed, or an ADU. Most structures not insured under coverage A would be insured by coverage B. Many insurance companies include a coverage B limit at 10% of the coverage A limit. If needed, you can usually purchase a higher limit of coverage B. Okay, we've gone over both coverage A and B, which insure the buildings on your property. Now, let's move on to coverage C. Coverage C is referred to as personal property. Personal property includes the items in your home, such as your furniture, small appliances, and your clothing. Generally, most insurers will include an additional 50 to 75% of your coverage A limit to cover the items in your home. However, certain items such as jewelry, watches, and other collectible items may be specifically limited on your policy. If you have some of these items, such as an expensive diamond ring, you can add extra insurance. All three of these coverages, A, B, and C, will have a deductible you'll pay before any payout from the insurance company. You'll want to choose a deductible that works for you. The higher the deductible you choose, the lower the cost of the overall policy. These days, most of my clients are choosing a $2,500 deductible. It seems as though many insurers price the policies to make this the most attractive deductible option. Okay, I've shared the tangibles of what is insured on a homeowner's policy. Now let's move on to the intangibles. Coverage D referred to as loss of use or additional living expenses, pays for rental expenses for you to live elsewhere if you can't live in your home due to an insured loss. The insurance company will pay for a temporary location, such as a hotel or a rental home, if the damage is extensive. It will not cover rental expenses if the loss is not covered by insurance. Not all damage that could happen to your home is covered by all insurance companies. Carefully review your homeowner's policy to understand what perils your home is insured for. Coverage E. Okay, we've gone over coverages A through D. Now let's move on to coverage E, known as personal liability. Personal liability insurance covers the costs of a lawsuit if you're sued for injuring someone or damaging someone's property. If you're liable for an injury or damage, your personal liability coverage can defend you in court and pay out an award or settlement up to the policy limit. Maybe your dog bites someone, or maybe someone trips and falls on your uneven stairs and breaks their neck. Or maybe you shanked a golf ball and hit someone, causing a severe injury. These are examples of potentially serious injuries for which you could be held responsible. Suppose you're at a friend's house and you accidentally bang into their expensive grand piano, causing thousands of dollars in damage. Maybe you've rented a vacation house and forgot you left the stove on and now the house is burned to the ground. Most insurance companies offer at least a $500,000 limit, and some offer up to a $1 million limit. If you feel these limits are not enough, you can purchase a personal umbrella policy for added protection. I will review personal umbrella policies in a future video. Coverage F. On your homeowner's declaration pages, you'll see all of these coverages listed in alphabetical order. We end our list of standard coverages with coverage F. Coverage F is also known as medical payments to others. Medical payments to others is for small medical claims resulting from a guest injury on your insured property, regardless of who is at fault. Medical payments coverage limits are typically set between $1,000 to $5,000. You may need this protection in the event a guest comes over to your house and injures themselves on the property. Maybe they don't want to sue you, but they think it's right that you pay for their medical injuries. Insurance companies want to avoid costly litigation, so this coverage was designed to pay out for small injuries and keep these types of claims out of the courts. Okay, we've gone over the main coverages on a homeowner's policy, so let's move on to some of the optional coverages available. For example, you may have a valuable ring or watch. Most companies have a limit on the amount of jewelry coverage included. To cover items like this, you may want to add extra protection onto the policy. Here's an example of limited coverage on a homeowner's policy. We call these sublimits. You'll notice it's not just jewelry. Each insurance company has their own list of these sub-limited items. It's important you review this to be certain you have enough coverage. I cannot emphasize enough how important it is for you to read your policy so you can gain a better understanding of your own insurance protection. In addition to optional coverage for special limits on your personal property, your insurer may also offer extra protection for buried utility lines or backups to your sewer line, or coverage to remove and repair dry rot or mold damage. If you run your business out of your home, you may need to add extra protection for both liability and business property, or buy a separate business insurance policy. We all have different insurance needs. Don't assume that all policies cover everything you need covered. It's very important you identify what is important to you and customize your policy to fit your needs. Also, your needs can change over time. So it's also very important you review and update your coverage as needed. I have some final thoughts I'd like to leave you with. First off, with regard to your personal belongings referred to as personal property, I recommend you purchase a policy that includes replacement cost protection. While actual cash value may sound better to some people, this pays out on a depreciated basis and is definitely not recommended. Replacement cost coverage will pay you what it costs to replace your personal property. A good example is a television. TVs depreciate quickly. If you don't have replacement cost protection, the payout to replace your TV would be pennies on the dollar. Another thought is animal liability, specifically liability coverage for your dog. In 2020, $800 million were paid out by insurance companies just for dog bite claims. Most injuries are coming from a few breeds of dogs considered bite breeds. This list includes pit bulls, Rottweilers, German Shepherds, American Bulldogs, Huskies, Mastiffs, and more. If you own one of these breeds, you may have a difficult time purchasing homeowners insurance. Regardless of what breed of dog you own, I highly recommend you purchase the highest limit of liability available on your homeowner's policy. Another topic regarding homeowners insurance is how your home is used. If you live in your home, you will need a homeowner's insurance policy. However, if you rent out your home, a homeowner's policy is generally not appropriate. You'll want to purchase a landlord policy that provides you protection as a landlord. Ordinary homeowners insurance does not have coverage to protect you as a landlord. So if at one time you lived in your house, but now you rent it out, you should update your coverage by changing your current policy or purchasing a new policy. If the home is being used partially or full-time as a short-term rental, you will likely need a new policy. Short-term rentals are a much riskier type of occupancy than a long-term rental, and the insurance costs will reflect this difference. One final thought. I recommend you put together an inventory list of your personal property. Imagine your house burns down and you've lost everything. If this happens, it's time to turn in the claim and get paid. Well, how are you going to remember all the items you owned that are now destroyed? Having an inventory list, or better yet, an inventory video, makes this process so much easier for you. So this concludes our video regarding homeowners insurance. Thank you for watching, and please click on the like button and subscribe to our video series.